2025, and it's mainly being caused by Trump and his tariffs and whatever else he's doing over in the US. But when you really look into it, it's all about global liquidity, and that liquidity is about to kick in. That liquidity is about to send crypto and other assets flying, in my opinion, and from everything I'm reading, everything I'm watching on YouTube. Hopefully by the end of this video, you'll be a bit more calmer and you won't be too emotional, because this is what this video is about: using market emotions to your advantage. So today, we're going to have a little look at the news to see what's been going on over the last 24 hours. I'm going to be telling you the data I'll be using over the next 12 months to take profits. Then it's all about market emotions. We're going to have a good look at the fear and greed index to help you with crypto this year, so you don't get too emotional. And to finish off, I'm going to use my 8 years experience to give you help and support in crypto, because like I said, it is hard. So what's been going on over the last 24 hours? Analysts claim two factors position XRP ahead of other assets for spot ETF approval by the SEC. Analysts of crypto research and data platform Kaiko argue that superior market liquidity and Tucrium's recent launch of a 2x leverage product position XRP ahead of other assets for the next spot ETF approval from the Securities and Exchange Commission in the US, following Bitcoin and Ethereum. In anticipation of the crypto-friendly Paul Atkins taking up the role of SEC chair, left vacant by the industry hostile Gary Gensler following his Senate confirmation last week, a slew of asset managers, including Bitwise, Grayscale and VanEck, have been filing additional crypto-related ETFs in recent months, with deadline decisions now fast approaching. XRP leads the active ETF applications, according to Kaiko data, with 10 filings currently, followed by 5 for Solana ETF and 3 each for Litecoin and Dogecoin. So, what's next? May the 22nd is the next important date to watch, as the SEC must respond to Grayscale's spot XRP filing by then. Since the leveraged ETF relies on returns from European ETPs and swap agreements to guarantee twice the daily returns of XRP, it's hard to see how a spot product is more risky and therefore diminishes most arguments for denying these applications, the Kaiko analyst argued. On Monday, the SEC delayed crypto ETF staking and in-kind redemption decisions as the agency mulls its long-term crypto regulatory strategy. Last week, Kaiko said Trump's tariff effect tumbled crypto volumes in Q1, but argued catalysts, including crypto ETFs, offered possible tailwinds for the second quarter of 2025. Fingers crossed. Disclaimer: the block is an independent media outlet that delivers news, research and data. And my own disclaimer is that this isn't financial advice, as always. Kanye, why I man? Yes, well, I'm not actually a Geordie. I'm from Middlesbrough. Anyway, the next story. Dollar gains on euro, yen, but tariffs keep investors cautious. Key points: dollar gains on the euro and the yen. Investors await clarity on US tariffs. ECB expected to cut rates by 25 BPS this week. The dollar rose against the euro and yen on Tuesday, showing tentative signs of recovery following a sharp sell-off that saw the dollar index tumble more than 3% last week. Investors nonetheless remain cautious on concerns about the impact of US President Donald Trump's trade tariffs on the US economy, as I said at the start. And the last story that caught my eye: why this Bitcoin BTC rally isn't bringing the usual hype. The current Bitcoin cycle feels unusually subdued compared to previous bull runs. Despite price appreciation, the level of excitement and retail participation remains muted. Basically, retail doesn't give a shit about crypto at the moment. Crypto Quant believes that an important on-chain metric underlines this shift. The percentage of BTC held for 1 week to 1 month is significantly lower than in past cycles. This suggests that the explosive influx of new participants, which once fueled rapid price rallies, is largely absent. Bitcoin's slow burn. According to the latest analysis shared by CryptoQuant, 2 main factors are contributing to this change. First, the macroeconomic backdrop has shifted dramatically. Unlike the 2020 to 2021 cycle, which was powered by near zero interest rates and aggressive monetary easing, today's market operates under tight liquidity conditions and sustained high interest rates. Capital is less willing to flow freely, which has made large euphoric price movements harder to achieve. Second, the market's leadership has shifted from retail investors to institutions, particularly following the approval of Bitcoin ETFs. Institutional flows are more measured, which has contributed to a structured, gradual uptrend rather than the chaotic volatility of earlier cycles. It goes on and on. Basically, retail isn't in yet, which we know. So, how I'm going to be taking profits this year? I'm going to be doing it incrementally, and the data I'll be using is the global M2 liquidity. And when you look into it, it's all about liquidity. Ignore the noise, ignore Trump and his tariffs and whatever else is going on. It's all about liquidity. And hopefully over the next few weeks, we'll see that reflected in the markets, in the crypto markets. Then I'm looking at the ISM Manufacturing Index, and this is a good indicator of what the US economy is doing. This is hugely important for assets like Bitcoin and crypto. Then I'll be looking at technical indicators. And I use, personally, I'm not a trader, so I'm not drawing charts on, I'm not drawing all these patterns on charts. I'm not looking at head and shoulders or bull flags. I just want to know the general direction of the market to help me take profits. And I'm going to be using SMA, simple moving average, EMA, exponential moving average, RSI, and volume. Then it's market emotions, the fear and greed index, which I'm going to go over in a minute. Then it's Bitcoin dominance. It's too high for me, as I've said a few times on this channel, far too high. And once Bitcoin dominance gets from 60% down to 45% to 50%, I'll be looking to take profits. Then it's the others dominance chart. Then the other data I'm looking at is keeping up to date, like looking at the news that I've just been talking about. I'll be checking to see if retail are in. Now, there are a few ways to check to see if retail. One of them ways is, are you getting loads of messages off friends and family? That when this happens, you'll be getting messages, what to buy, when to sell, etc., etc. When this happens, you know retail's back. You can also look at the app charts, like Apple app charts. If Coinbase and other exchanges like Binance are somewhere near the top, you know that retail is back. So, the fear and greed index, how to use market emotions to help you win in crypto. Basically, you go against the herd. If there's loads of fear in the markets, you buy, if you can buy. If there's loads of hype, loads of greed, you sell. This is basically what you do. Now, all you do is go on CoinMarketCap and you can see the fear and greed index. Let me have a little look this morning. So the fear and greed index at the moment is 29 out of 100. So that's fear. Extreme fear is 15 or below. Fear is 30 or below. So what is the CMC Fear and Greed Index? The CMC Fear and Greed Index is a proprietary tool developed by CoinMarketCap that measures the prevailing sentiment in the cryptocurrency market. This index ranges from 0 to 100, where a low value indicates extreme fear and a higher value indicates extreme greed. It helps investors understand the emotional state of the market, which can influence buying and selling behaviors. The index provides insights into whether the market may be undervalued, extreme fear, or overvalued, extreme greed. So when we're at extreme fear levels, if you can buy the dip. When we're at extreme greed, you need to be getting out of the market. Most people, most retail investors, unfortunately, won't listen to this advice. They're going to FOMO in and think that crypto is going to keep going at some point later in 2025. And if you scroll down on CoinMarketCap, it even tells you how you can use this index. The CMC Fear and Greed Index can be used in several ways. Market sentiment analysis. By observing the current value of the index, you can gauge the overall mood of the cryptocurrency market. For example, a high value suggests that investors are overly greedy, which may indicate that the market is overheated and due for a correction. Conversely, a low value may suggest that fear is driving prices down, potentially creating buying opportunities. Contrarian strategy. Some investors use the index as part of a contrarian investment strategy. That's what I'll be using. As I said, it's part of the data I'm going to be looking at. The idea is to be fearful when others are greedy and greedy when others are fearful. If the index shows extreme greed, it might be a signal to consider selling assets, while extreme fear could indicate a buying opportunity. Complementary analysis. Use the index alongside other analytical tools and indicators to make more informed decisions. It's important to remember that the index is a tool for gauging sentiment and should not be used in isolation. Please don't be one of the investors who are going to get too emotional in crypto. If you get too emotional, you lose. This is from what I've read, hundreds of investing books, and from my 8 years experience in crypto. You need to be neutral and calm, or at least try to be. Now, I'm going to tell you how I can help you over the next 12 months. Hopefully, I can help you remain calm. Now, if you go to my YouTube page, look in the description, you're going to find the link for my crypto community, Crypto Investing Made Simple. And if you get in the community, you're going to find 4 investing courses. And them investing courses are going to help you to get to where you need to be so you can make the most of the upcoming crypto bull run. Because when it goes, it's going to shock us all. So you need to be fully up to date. You need to focus on education. Now, the more you focus on education, from my experience, the better your experience is going to be in crypto. So get in the group, complete the course material, and you'll do well, in my opinion. You also get a weekly newsletter that's going to keep you fully up to date and help you to take profits. This is what 2025 is all about, taking profits. And in the main course, Crypto Investing Made Simple, one second, I'll just get it up. So on my school community, you get around other investors, which is hugely important. You get crypto courses to complete. Now, most people don't give a shit, but if you do educate yourself, you give yourself a chance of winning in crypto. Now, Crypto Investing Made Simple, it's a 3-hour course. It's my main course. That's got 8 years of experience in just 3 hours. This is going to help you to remain calm in crypto. It's going to give you crypto fundamentals. That's one module. How to avoid common crypto mistakes. Buy Bitcoin and crypto safely. This is hugely important. How to evaluate potential crypto investments and when to take crypto profits. So how to avoid crypto mistakes is where you're going to get the most value. It's going to help you avoid being too emotional, getting too greedy. So get in the group, get in the community, complete the course material and ask any questions you've got. There's loads of other investors to get around. And I believe that if you get around other investors, it's going to help you to win in crypto. Anyway, that'll do for now. Let's have a look at the comments. Why I man? Someone thinks I'm a Geordie. As I said, I'm from Middlesbrough. Kilbish said hi. Calf Cruttenden said hi. That's my mum. Hello, mum. My biggest fan. US destroyed all markets. So US hasn't destroyed all markets. It's by design. Basically, long story short, they're trying to drive the interest rates down. They're trying to force the Fed's hand because they have to refinance huge amount of debt, trillions of dollars. So they want the interest down. So it reduces the payments. Simple as that. Don't just listen to the news and get all negative. That liquidity I mentioned earlier is coming. I've had a rough few days. My son came out so I kicked him out and disowned him. Who bit your ear? The ear is from jiu-jitsu. No one's bit my ear. Anyway, that'll do for now. Thanks for watching and good luck in crypto in 2025.